Hi believers, this is Nishant from Team Waya. In this video, we will discuss about road ahead for the Indian markets, covering India's major indices and sector outlook. Before we delve into the charts, let me highlight some key performance statistics of the Indian markets. In the last 4 months, we have seen the markets making new highs. Since April 2023, Nifty and Bank Nifty are up 15%, mid cap and small cap index are up close to 25%. The question is how much more upside from here, and which sector and stocks are going to perform. While none of us have a crystal ball to answer these questions accurately, Vaya's system follows an evidence based strategy which helps to identify sectors and stocks that may perform well. In the next section, we will discuss Indian markets on the charts. Let's start with the Nifty. We have seen a good rally in Nifty since the month of April, not giving opportunity to buy at lower levels. Hence, I can call this as one of the hated bull market. Let's understand if we are losing this trend or the correction might come and what could be the potential target and the expected support for Nifty. After giving breakout in the month of April, it has broken multiple resistance. Although the RSI indicator looks heated, but it has cooled off from 80 levels to 60 levels without any major correction in Nifty, which is a good sign. The expected support levels are 19,500 and 19,300. Because this is where Nifty has taken resistance and support in the recent past. Let's visit the higher time frame to understand the structure of chart. On the weekly charts, Nifty has formed a cup and handle pattern, which is a bullish continuation pattern. We took a conservative target for Nifty when it has crossed the cup and handle pattern. Let's understand how the target has been arrived on the basis of this pattern. Now, considering the range of the handle of this pattern, we expected Nifty to touch 10% from this range. Now, conservatively, we believe that the target for the Nifty should come around 20,500. And we consider the pattern as a whole, the target is much bigger. The target for the Nifty with the pattern comes around 22,600. However, the pattern suggests a continuation in the bullish trend, but as an investor, we should always be cautious and understand the risk and reward which favors us. Concluding the outlook for Nifty, we do not see any cause of concern. We expect the trend to continue with minor corrections. Moving on to the Bank Nifty, it has behaved something like Nifty, but with periodic consolidation and volatility, giving enough time to accumulate stocks. Focusing on the fundamental side of the banking sector, overall the sector is experiencing strong credit growth and the balance sheets of the companies are getting healthier. On charts, we can see the Bank Nifty has a behavior of breaking out after a time of minor corrections. You can see here, you can see here, we can see here. Regarding support, Bank Nifty has a support in the range of 44,500 to 45,500. The range is little broad, but that's what the chart suggests. Moving to Nifty Midcap, spectacular run in midcap stocks. At Vaya, we caught midcap and small cap pretty soon when we noticed that charts are placed well and other factors which we track were also showing positive signs. We have released most of our calls from midcap and small cap universe in these months. Looking at the higher time frame, like Nifty, midcap index also indicates a cup and handle continuation pattern. With the first target of the handle is already been achieved, and the second target is placed 12 to 13% upward from here. Moving to small cap index. Small cap index too has given amazing rally. In our previous updates, we have emphasized more that there is a room in the index. Although we are close to all-time high, the index still have room to move 3 to 4% upwards. Considering mid cap and small cap index both have still considerable room left on the upside. At Waya, we are focusing more on mid cap, small cap stocks. Nifty 500. This is an index, or I can say it is a universe of top 500 stocks. The chart is placed similar to Nifty 50 and mid cap index. The potential of moving 10 to 12% up should not be ruled out in this index as well. Now, you must be thinking that we are repeating the cup and handle formation on charts like mid cap index, Nifty index, and the 500 index. It is very important to understand that these index are being aligned on the charts, and we are gathering some evidences of finding out, do we have more room left? Is the index going to continue on the upside, or it has some time to correct and come down? So it is very important to find the evidence and place a probability on that to understand if we can go bullish or bearish. Moving to sector analysis, Nifty Pharma has given 8 to 9% return each month in the last 2 months. Couple of factors that played out well for the pharma as a sector. Decrease in shipping cost substantially. This has an effect because the industry has a lot of export exposure. Bottoming out of the operating margins. Valuation comfort, improving visibility in earnings. All these are expected to generate positive free cash flow for pharma companies after many years. On the chart, the index is near all-time high. We expect pharma to break out and make new highs. We are focusing on pharma sector with stock specific approach to release new calls for our subscribers. Nifty Realty Index has made a new high after long consolidation. We expect index to move 10% more on the upside on the back of strong booking trends and demands. We also have one multi-bagger open from the real estate sector, and in the past we have also suggested our subscriber to buy multiple real estate stocks. On the long-term chart, if we see realty index, the chart has broken out from its resistance, consolidated and broken out again. Hence, we say that new high lives are not ruled out. On the back of strong earnings, we also expect realty index to break out from this resistance as well. Nifty PSU banks, fantastic numbers from many PSU banks so far. Considering the valuation, there is still room to grow on the back of good earnings. Now, we also discussed during the Bank Nifty charts that due to strong credit growth, the bank's balance sheet is getting healthier. On the chart, we do not see any major roadblocks. Hence, we believe a new life high is awaited. Nifty Infrastructure Index. We have been bullish on infra since long and have closed multiple calls with profits on infrastructure stocks. We believe the trend to continue on the back of government push and strong order book of infrastructure players. On the charts, we have seen a horizontal breakout and the trend still continues. The auto index has taken a pause in the month of July. Our thesis says that the underlying shift in the consumer demand towards premium products is going to drive margins. Now, it's a matter of a company, how do they grow their revenue? On the charts, the index is showing time correction and the RSI indicator is also cooling off. On the daily time frame, we can notice RSI divergence, but it is too early to confirm any weakness for the auto index. Nifty FMCG index. Nifty FMCG has given a very good return since the start of this year. Now let's focus on the longer time frame. The index is following the channel. It has reached the upward end of the channel during which the large FMCG companies are not delivering strong volume growth. At the same time, small companies, or I may say mid companies like Jyoti Labs, has given very strong volume growth and the guidance. Since the index has been driven by larger player, it is important to stay cautious, be stock specific in FMCG stocks. Nifty IT index. The large IT companies continues to disappoint. The index has been consolidating in a broad range. Large companies like Infosys coming out with the disappointing results and growth guidance, whereas mid IT companies are showing growth in earnings and resilience. Although the index has been trading in a broad range, it gives you many trading opportunities to make profits. Let's discuss crude oil. The prices of crude oil is very important because India imports more than 80% of its crude oil demand. Hence, the fluctuation in the prices of the crude oil impacts India as economy and also the companies who uses crude oil or the derivative of the crude oil as a raw material. Hence, increase in the prices of crude oil is not favorable for India and the companies dependent on crude oil. Now, the oil seems to be marching towards 7,000 after a small breakout and a divergence, and also one big trendline breakout. The immediate resistance looks at 7,000. The rise in crude oil can spoil the party of paint companies which are enjoying higher gross margins due to lower crude oil prices. Hence, we will stay cautious when it comes to the paint companies, especially. Moving on to US indices, S&P 500 and Dow Jones. Both are near its minor resistance. The probability is very high of crossing this resistance and making new life highs. Why we say that is because US is going through elevated inflation and a 22-year high interest rates. All this information has been priced in the index, and the index is still showing resilience to all this news. Hence, we believe that the US indices also may make new life high along with the Indian indices. While Nasdaq index, which has high constitution of tech stocks, continues to rally, Indian IT index remains in consolidation. Like S&P 500 and Dow Jones, Nasdaq too is near its minor resistance. However, the indicators are heated and forming divergence. We will adopt a wait and watch approach here. Concluding our analysis, major indices have no evidence of weakness and may continue to rally. Indian companies had mixed earnings so far. Banks, infrastructure, auto, realty, and pharma posted improved earnings, while FMCG, chemicals, agrochem, fertilizers, and IT posted less or no improvement in earnings. RBI monetary policy meeting is scheduled on 8th, 9th, and 10th of August, which is a key event to watch out for. Now, in the last meeting, they did mention that they are not going to stop the rate hike if the inflation worry stays in India. The dollar index remains weak, which is positive sign for emerging markets, especially India, because when the dollar is weak, we see a lot of funds flowing to the emerging markets. For the month of August, we continue to remain optimistic till we find any evidence of weakness. At Waya, we make our best efforts to keep you informed about markets through our weekly bite and sectoral update. We continue to evaluate opportunities for our subscribers and strive hard to remain a step ahead to create wealth for us believers. Thank you and good night.